Good afternoon, everyone, and welcome to Stock Market Today for Monday, July 21st. It's Alissa Coram here, and the Nasdaq and S&P 500 extending their gains in today's session, but some stocks finished better than others. And joining me now to discuss the action in today's session is my colleague Justin Nielsen. Justin, what do you got for us?
Yeah, that's quite the understatement. Even the indexes were well off their highs, but still, again, a gain is a gain, so we can't complain too much. We've got a few stocks for you to look at, though. A-Lab was a big winner today. Astera Labs, ticker symbol ALAB. So we'll look at that. Urban Outfitters extending gains, kind of looking at a breakout potential. And gold, hey, it's still the shiny one, and we're going to take a look at WPM, Wheaton Precious Metals, which has a little bit of gold and silver.
Sounds like a plan, Justin. We'll check in on those stocks, but first, let's take a closer look at the major indexes today. Somewhat of a mixed session, and as you said, finishing off highs with the Nasdaq up 0.4% by the close. We do have a lot of up days in a row here. We've been talking about how extended we've been getting, but still holding in this power trend. Meanwhile, the S&P 500 up a little more than 0.1% on the day. You can see the fade there as well. The Dow finished lower here by just a hair. This chart's slightly delayed, but the Dow down fractionally and the Russell 2000 down about 0.4% headed into the final stretch. The NASDAQ clearly the leading index here, Justin. What do you make of how we've started the week here?
Well, look, we've got a lot of days up in a row, and as we mentioned on the Friday Stock Market Today video, we've got a lot of weeks up. Not in a row necessarily, but certainly more up than down. And even the down weeks haven't been that bad. So, with that context, having a little bit of just flat action isn't necessarily a bad thing. And I mean, again, at the end of the day, a gain is a gain, and we did see still some progress in these stocks. A little disappointing again compared to where they were earlier in the day, but not a disaster. We have pretty low distribution day count right now, and so even if you get a stalling day here or there, typically what we've been seeing so far is, I mean, look at the stalling day we had just last week. Stalled, came in a little bit. We got the weakness the next day, as you would expect, but then right back at it and to new highs the very next day. So stalling, nothing really seems to be slowing this market down. Headlines aren't doing it. Chart action, those stalling days aren't doing it, and distribution isn't really there to be seen. Very few sell signals, so it's a fairly healthy market that's trending.
Yeah, and we'll have to see how some of the big earnings reports over the next couple of weeks shape the action. But Justin, what I think is tricky about the current market environment is you have two sort of, I don't know, conflicting signals here. One is we have this strong, powerful uptrend, the power trend. That's the time where you do want to be getting more aggressive. But at the same time, it's been a little while at this point since we've paused. So in terms of timing of new buys, like the fade today, if you were aggressive at the open, in some instances, one which we will look at, it definitely paid off in a big way. But in other instances, you are at risk to those pullbacks. So I guess it just comes down to risk management and really picking your spots, because both scenarios can unfold. Being aggressive can pay off, but we are getting a little bit of that extension, as we've mentioned.
No, absolutely. And to your point, yes, the power trend is when we want to get a little bit more aggressive, but we want to do that early on, right? We
Yeah,
don't
the
want to be
press the
like, oh,
gas moments, right, that we talked
we're
about.
we've been trending above the 21-day moving average line for more than 50 days. So to say let's get aggressive now, I
Yeah.
mean, that's a little that's a little late. We've been talking about that for a while, again, since the power trend started, which was in May.
Mhm.
So it's I feel like now is a little bit more time of more of that coasting,
Mhm.
where you just kind of let your positions develop and extend. You might be doing some tweaking here and there if you're a position trader, but for the most part, a lot of the stocks have already broken out and they are extending their gains and continuing to go.
Right.
So if you have a bad day here and there, even a day where you don't finish that great off the highs, that's not a disaster in the overall trend. And this is why sometimes taking that step back to the weekly can help you, not just with the indexes, but with the individual stocks as well.
No doubt. And in terms of those points where we do wanna get aggressive, I feel like we hammered home the point of the pullbacks that you do get to the 21-day line, and we did have that in your, mid to late June timeframe here. So the 23rd and 24th of June, we were saying in real time, if you're going to press the gas in a power trend,
Yeah.
that really is the time to do it. So as you said, now we can ease off of the gas pedal for the most part and just enjoy the gains that we've been making, like you said, with some tweaks here and there.
Absolutely, and that's where compounding comes in, right? So some very small gains here in your stocks, if you've got a
Mhm.
lot of cushion on them, it just compounds out and really kind of it can do a big
Yeah.
number on your overall portfolio gains for the year. And you make a great point, Allie. That pull back to the 21-day moving average line. Again, those reversals are kind of times where you can get a little bit more aggressive, and choose your spot there, especially when you see the follow up like you did the very next day back to high ground. It's kind of like a nice confirmation that yes,
Mhm.
this reversal was in fact a chance for more participants to get in and or press the gas themselves. So you're in good company there.
Yes. Okay, let's get quick thoughts on the S&P, Justin.
So one of the big things we talked about last week was the fact that we had that July 3rd high where, arguably we were starting to get extended at that point. We went sideways, and that sideways action is good, right? It allows for some handles to develop, some shelves to develop, some more patterns to develop in individual stocks. And we basically came out of that, a little 10-day, 2-week consolidation, out into new high ground. And so far, we are holding it. I mean, look, it wasn't a great day Friday. It wasn't like we were banging the doors off the index. It was flat though. So at least holding the gains. And even today, even though we lost a lot of the gains from the intraday highs, the fact that we still, closed positive, we're still holding above that level, I think is a positive. If you start dipping back below there, it just might mean this needs a little bit more time to consolidate and digest the gains that it's had. But so
Mhm.
far, it does seem to be holding above that July 3rd high.
Yeah. And then we have that reversal day low from midweek last week with that temporary Fed scare that the market shook off quickly. That coincides with the 21-day moving average. We're about 1.6% above that level for the S&P, just to give our audience a little frame of reference there. Let's also go to blue chips and small caps. Justin, here's the Dow.
Yeah. So the Dow, it's still kind of in that little consolidation phase. But again, still trending above the 21-day moving average line. Got support there last week. Spiked up from there. And so again, not doing anything wrong. Certainly not the leading index right now. That is obviously the NASDAQ, where a lot of the AI lives and the AI adjacent and so on. But Dow holding in there just fine. And the Russell 2000, probably the weakest of the bunch. But it's still got above that 2200 level. It also got that support at the 21-day moving average line. It's holding it so far, but not quite getting into that recent high ground like the Nasdaq and S&P 500. So if you're going to be putting your money somewhere, it's usually best to go with where the strength is. And right now, that's the Nasdaq and S&P.
Mhm. Any ETFs you want to quickly check in on before those three stocks?
Well, we will talk a little bit more about it, but the winner of the day, if you just kind of look at the sector spider ETFs, the winner of the day was XLC, which is your communications. That is that's not looking bad. And of course, Meta and Alphabet are the two big components there. We did talk about both of those on IBD Live this morning, so those are certainly worth taking a look at. Meta getting back above its 21-day moving average line. And look, we would be remiss not to remind folks that earnings season is upon us. We've got a couple hundred stocks in the S&P 500 that will be reporting over the next couple weeks. And so if you haven't checked it out already, Alexis Garcia and Ed Carson do a wonderful job of
I do.
giving that earnings cheat sheet every Friday. So make sure you check that out.
Yes. Great call out there. Okay, let's go to Astera Labs. This is in the same industry group as NVIDIA, up 19% on the day. And this is a chart pattern we've been following very closely in recent months, kept bumping its head up against that 100 level. But I guess, Justin, that makes it even more of a compelling resistance level to watch if and when it does clear that level. We did also point out potential early entries in Thursday and Friday of last week as it started to move, but understandable if traders didn't want to strike at that point since its personality up until today was to keep chopping around in this range. But we did see an explosive move today. This was the first stock that we covered on IBD Live, and it really got going throughout the day, up 19% by session's close.
Yeah, and sometimes a lot of a lot of folks were asking, "Oh, what's going on with ALAB? What is causing it?" We didn't know, but sometimes the chart is telling you something is happening. And this was actually on the short list of stocks to cover on Friday. We went with Toast on that day, but Alab deserved an honorable mention because in a very similar way as Toast, it was hitting its head up this same level, over and over and over again. And sometimes you think, oh well, there's just forget it. I've already tried it so many times, it's not working. And eventually it does, right? It's like when you finally do throw in the towel, that's when it works. So would you have chased it off this gap up? I think that depends on how your risk management rules fall. If you are comfortable buying a gap and okay, look, I'm going to maybe give it to the lows of the day, that's one way you could play it, especially if you waited to see that first 5-minute bar. Okay, it's a good first 5-minute
Mhm.
bar. It did pull back, but it held above the lows of the day, and then it made some more progress. So it held above those lows, gave you a chance to get in it. Look, you weren't going to be getting all of the appreciation from 100 to 120.
Right.
But it also, look, it was, as you mentioned, an early entry possibility last week. And if you are okay with trying something, it not working, trying it again, it not working, as long as you're making your losses really small, you can still try something multiple times. And that one time it does work can make up
Mhm.
for all those small little losses. And they usually don't go up this much in a single day. This usually takes, a few weeks to develop like this, but still, it can be well worth it to try things more than once.
Mhm.
We've had so many of our traders, so many of our guests that talk about that. Just recently, Eve Bobach was on the IBD Live show talking about how she did that with CoreWeave. It was not until the third time that it worked for her, but when it worked, it was
It
magic.
really worked. Exactly. And I think the other reason why we're paying close attention to this is not only the fact that it's in a really nice theme here, Justin, because it has had some sloppy action compared with some of the leaders in this fabulous semiconductor group. If you're comparing the chart action to your NVIDIA or to Broadcom, but the fact that this stock has triple digit growth on the top
Mhm.
and bottom lines, I think that was sort of the reason why, okay, maybe the current chart action again before today isn't your A1 top tier leader in the group, but look at these fundamentals. When we saw Nvidia go on its big move a couple of years ago, one of the things that we were noticing was this huge triple digit growth. Alab has that.
Yeah, and it's an important point because we talk so much about charts here. It can be very easy for folks to remember that a lot of times it does start with the fundamentals, and ALAB certainly has them in spades. And you make a good point. Like, look, the relative strength was not really there. It wasn't a broken stock by any chance, but with all these stocks that were going up so much,
Mhm.
one could be forgiven for not being as excited about this stock that was not moving. Why would you necessarily say, oh, my money deserves to be in a spot where it's been stagnant for a while. But again, sometimes there is sector rotation. Some stocks, take their turns. Again, I wouldn't blame anyone for passing on this one, but I
Mhm.
also think that with proper risk management tools, you could have easily gotten into this one and gotten a little bit out of it. Um, as a counterpoint, I didn't play this one today. I played IREN, talked about that on IBD Live. That one did not work out so well. It was very good at the start, really stretched its gains. I think I was up, well over 10% on the position that I bought that morning, but then it really started coming in. So remember, you don't have to wait for something to come all the way back. When you've got a strong gain like that, you don't have to wait for it to come all the way
Mhm.
back. You can start looking at some of these higher levels at, either, just below that 21 where it can kind of got some support and then broke under it, or even there was that important level where it really tried to kind of bounce, just above 19. When it failed there, that was kind of another opportunity to say, okay, well, maybe this isn't working. Or look, if you are still thinking that this is the Bitcoin and everything like that is okay, it's okay to hold it, as long as, again, you have your risk management rules in place, and you
Mhm.
don't deviate from those rules.
Yeah. All right, well, a bonus stock for everyone there. Let's go to Urban Outfitters, Justin.
Yeah. So, of course, if you have a teenage daughter, you probably are very aware of this store. And look, even if you don't have a teenage daughter, they've got the Anthropology, they've got Free People, they've got Urban Outfitters, they've got a little something for everybody. And not only that, but they have something for the chart readers here as well. As you mentioned before, let's just take a quick look at the fundamentals. Those are some very solid double-digit earnings growth numbers after some triple-digit last year. Still very solid at double-digit. A little mediocre on the sales earlier, but those are ramping up to double digits. So 10, 11%, not huge, but this is off of some big, these aren't small numbers, right? This is over a billion in sales each quarter. So that's pretty impressive. I do have a position in this, by the way. I actually got into this last week as an early entry, as did Swing Trader, but a nice follow up move today. So for those that were actually already in this was an opportunity to add to your position. Sometimes those
Mhm.
early entries, you can give an ad, and that's a nice way to increase your position and exposure to something that's working.
Yeah, and, you mentioned the Anthropology brand, which it's clothing, but also home goods. I feel like that's more of your Gen X millennial, market versus the Urban Outfitters, more the Gen Z market at this point, or the youthful, in my youth, I too liked Urban Outfitters, but I was looking at the numbers in Anthropology. If you look at a breakdown in revenue by brand, it really is Anthropology that's driving a lot of the revenue from a raw number perspective, but also in the same store sales growth. So something to think about as well here.
Yeah, I'm glad you brought that up, because sometimes that extra level of understanding the story and where it's coming from, and especially if you've put your Peter Lynch hat on and you've taken a little bit of a trip into the stores, and you kind of know what you've been shopping there, or you're following your daughters or your wives around. And I mean, I don't shop there personally, but I shop at Costco. That's where I get my
Yeah,
clothes. So,
exactly.
but
Which
it,
they
it
sell
it
free.
does give
It's
you.
Costco has free people every once in a while, I feel like.
Oh, okay. I didn't know that. Well,
Yeah.
but it does give you a little extra conviction when you're actually purchasing, and you're seeing it on your credit card
Mhm.
statement. At least for me,
Exactly.
whether I'm buying it or not, if I'm seeing it
Yeah.
on my credit card statement, that helps me get more conviction in it.
Yeah, and even the new wave of retail. I don't go shopping in a store very often. I'm more looking at the online experience. So,
Mhm.
anyway, let's lastly go to WPM. We saw gold miners on the move today. WPM up 3.5%.
Yeah, the one of the ETFs that I would say actually did better than XLC that we talked about earlier was GLD. So
Mhm.
that was a big winner today, up 1.5%, and WPM even more so. So kind of this flat area that you saw in GLD, and for WPM, it came down to that 50-day moving average line. A little bit of a bounce here, hasn't quite cleared these recent areas of resistance, but again, as an early entry, a bounce off a 50-day moving average line or a 21-day moving average line does make sense. This is something that Leaderboard already has and has been holding on to for a little while, because this is not the first bounce off the 50-day moving average line. And so far, it's been holding above that previous bounce above the 50-day moving average line. So each time, you kind of are able to even raise your stop a little bit. Oh, okay. Well, now if it, comes in and undercuts this, I've got another level to use to help manage the risk. But a nice flat base here when you look at the weekly chart. And it really has been kind of going up at a nice angle, and then it's just paused here. So I think this looks fine. You might not be that excited about gold. There's all this AI, so why would you go for the shiny metal? But look, if there's a sector rotation, I think you need to be very aware of these stocks that are basing right now, because they could be the
Yep.
leaders of the future.
Well said, Justin. We appreciate it as always. Thank you.
Thank you.
Thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details of our daily morning live stream. We will see you there, and then we'll also see you right back here tomorrow after the close.